good morning, all. Ira Epstein with your morning flash update for December 11th, Thursday, 2025, just around 8:05 a.m. Central Time. In terms of news, the jobless claims came in at 44,000 increase. They expected a 32,000. I had told you yesterday they were looking in the 30s, and the market beat that, but we had a monster drop in the continuing claims. So one sort of offsets the other. Don't know what to make of that. The U.S. trade balance down to 52.8 billion. They expected 63. That's quite a number. They did revise down the August number, as you can see, to 59.3 from 59.6. Not a real meaningful number, but that is very, very interesting. And a lot of it is due to increased U.S. exports when you go through everything. The natural gas report comes out at 9:30 this morning, and I have already reviewed the OPEC and IEA reports, and I see nothing bullish in either of them at this point in time, and energy prices are lower this morning, as you'll see in a moment here. So here you go. You can see that you're down about $1 right now in the Brent. You're down $1.06 in the WTI. We have a mixed bag going on right now in the stock indices. Do remember what I told you. We get what's called a yin yang. If you understand the time frame that the Fed meeting comes out at 1 o'clock, that's about 3:34 in the morning. In parts of Asia, they wake up to it, they react over time. And then Europe, when we do ours at, and I'm giving 1 o'clock Central Time. In Europe, it's dinner time. People have left the office. So Asia gets it, then it goes around the corner to Europe. It comes back to America. And sometimes we get what I call that yin yang. We go one way off the report first, then the other. A lot of this also has to do with Oracle. And that is why you are seeing the NASDAQ down as much as it is at this point in the S&P. The Dow is up, but none of that explains why the Russell's giving back 7 points, which, in my opinion, the big winner of yesterday was the Russell. And I say that because what the Fed ended up doing was giving one of, let's call it a child of quantitative easing. They went with 5 months of $40 billion a month buying of U.S. Treasury short term. That helps little companies like that make up the Russell 2000. The other thing that they did, which was a surprise to me, they see sequential and quote unquote sequential problems going on in the U.S. jobs reports. And the Fed chair said that he thinks they're overstated by as much as 40,000 jobs a month for the past several months. That's very interesting to see. So the Fed became proactive and decided to take the lead and cut the rate by a quarter. Now, the dot plot didn't show that you're going to get a lot more cuts, but that all changes when Fed Chair Powell is gone and the president puts in whoever he wants. News this morning is it might be as soon as Christmas time, 2 weeks from now, that he still might consider naming who the next Fed chair is going to be. It's very interesting. If you get the next Fed chair named sooner rather than later, what happens is no matter how Powell wants to run what he does, that next Fed chair can come out and say, doesn't have the influence, but say, I disagree or I agree. And that creates an issue for all of us. When you look at the bonds and notes, you can see yields are falling. We're back down to the 4.13. This morning, I was thinking about hanging around this 4% area, and the gentleman that had called this 8 months ago was Bill Gross, the old PIMCO. He thought it would go down not much under 4.25 area about that time. All right, he was off a quarter point. That's not so much. I think it was a good call on his part. Yesterday, you saw from Double Line, Jeff, the bond king, the new one, and he is saying that where you want to be is long the 2 year, short the 10-year. He thinks that is where the money is going to be made, and today that seems to be working. Remember, as you go up, you lose yield, so the 2 years not losing as much as the 10 today. It's just fascinating what goes on. In the dollar, I think yesterday was just a very bearish report for the dollar from the Fed. Most foreign currency central banks that I see want to hold interest rates steady. Mexico's lawmakers just announced that they are going to put tariffs on India, South Korea, and China. And the tariffs can go from 5 to 50% unless they are able to make trade deals. China floods the Mexican market with a lot of product. This is what President Trump has been asking for, and he seems to be getting it now. So those are the things you want to go with. I covered already in detail for today the IEA and OPEC reports. So if you want to see them, you've got to get onto our research. You can do that by coming up to the top up here, giving a click, or going over here and giving a click there. Go to iraepstein.com. Go to the word research, and that's where you get my twice daily reports. I give a lot of information in those, and let's see where that carries us. In the meantime, I'm Ira. You have yourself a good trade day. I'll catch up with you tonight.